So we are doing the May 2015 paper 41, where we were supposed, it's a part 3. We have already made the property, plant and equipment schedule. They have asked us to make a new balance sheet for the firm, where they had already given us the old balance sheet. So this was the old balance sheet that has already been given to us, and we are asked to make the new balance sheet. Okay. Now over here, we will copy the same format of the 2014 balance sheet, where we will write the non-current asset the way it is given to us. We will write the tangible asset the way it is given to us, tangible. To write this, you get 1 mark. Then you will write your property, plant and equipment, and this amount you will get it the schedule that you have made in part 2 of the video. Like the net book value at the end of 2015. Then for investments, because no information was given to us, we will take it as the same amount. Then we'll write our intangible, we'll write the goodwill, and you will get the amount for your non-current assets. After that comes your current assets. For your current assets, you will write inventory. They have given you the value of the inventory, and they said that the closing inventory is expected to be valued at 70,000. So my closing inventory will become 70,000. Now trade and other receivables would change because they said that your trade receivable collection period is 45 days. So trade receivable collection period is trade receivable over credit sales into 365. Your trade receivable collection period is 45 days. You don't know your trade receivables, but you know your credit sales was 786. We had calculated your trade receivable, your credit sales was 786. We had calculated in the budgeted income statement. So my credit sales is 786 into 365. So to get my trade receivables, I will do 45 into 786 divided by 365. I will get my trade receivables. So when I calculate 45 into 786 divided by 365, it is coming up to 96.9. I have to round it off to the nearest thousand. So it will become 97,000. Then my total current assets will not be this. It will be 70 plus 97. It becomes 167. And my total assets will be 432 plus 167, which will make it to 599. When I go to my total liabilities section, I will see that ordinary shares were unchanged, redeemable preference shares was unchanged, share premium was unchanged, and retained earnings we had found out in our first part of the question, which was over here, and we found out to be 58, the retained earnings. Okay, so my retained earnings would be 58. My equity and liability would total up to 368. Non-current liabilities will remain unchanged. 150. Now current liabilities, trade and other payables, you will have to find. Trade payables payment period is 40 days and all purchases will be on credit. This we will see later. Taxation, we have calculated in our income statement, it could be 8,000. So my taxation was 8,000. Instead of 4, my taxation will become how much? My taxation will become 8,000. Cash and cash equivalent will be your balancing figure because you don't know. and your total equity and liabilities will become 599. Now your target is to find your trade and other payables. It is expected to be 40 days. So first you have to find your purchases. You know your cost of sales is opening inventory plus purchases minus closing inventory. And your current cost of sales you had found out to be 456 in the income statement. So current cost of sales is 456. Opening inventory is the one which was last year's closing inventory, and last year's closing inventory was 74,000. I don't know my purchases, but I know my closing inventory is 70,000. So 456 minus 74 plus 70 will give me my purchases. So my purchases will become 456 minus 74 plus 70. My purchases will become 452. Now my trade payable payment period is 40 days. That means 40 is equal to trade payable upon credit purchases into 365. So let's see what is my trade payables. 40 is equal to trade payables. What is my credit purchases? 452 into 365. So 40 into 452 divided by 365 will become my trade payables. So 40 into 452 divided by 365. This is coming up to 49.53. I have to round off to the nearest thousand, so my trade and other payables will become 50. Now I want to know my cash and cash equivalent. To be very clear, my total assets is always equal to my total liabilities. Okay, so my total assets is always equal to my total liabilities. We can try and use that to find how much will be my current liabilities, the total current liabilities. Now I know total assets is equal to total liabilities. Total assets is 599. This is equal to my equity and retained earnings section, that is 368, plus the non-current liabilities, that is 150, and plus the current liabilities. I'm trying to get my total current liabilities. So current liabilities will be 599 minus 368 minus 150. So 599 minus 368 minus 150 will give me my current liabilities, and my current liabilities will be 81. If my current liabilities is 81, how much will be my cash and cash equivalent? So it will be 81, go reverse. 81 minus 8 minus 50. So the cash and cash equivalent will be 23. Please remember and please be mindful that you finding your trade receivables and you finding your trade payables is going to give you 2 marks each. And this is how you make your statement of financial position.